Fundamental de lo que va a mover los mercados, las bolsas. Tenemos ya con nosotros a nuestro siguiente invitado, Stefan Hofrichter, responsable de economía y estrategia de global de Allianz Global Investors. Stefan, good afternoon. Thank you so much for being in Negocios Televisión.
Buenos tardes. Thanks for having me.
Stefan, markets have extra volatility this week because the earnings season has already started in Wall Street. What do you think this might mean for the stock market? Because we've been experiencing a rally in the last few months. Do you think that this will continue after the volatility of this earnings season?
The earnings are one thing, and so far earnings have been doing well. There is, however, there are some caveats that we have to factor in. First, when you look at the earnings in the overall economy in the US, they are down already. And they are typically a precursor of what might happen also to the earnings of listed companies. Now, could take a while until you see this having an impact also on listed companies, but this is something that we have to factor in. Also, we still think, and that brings the statement that I just made in the broader context, that we are still heading for a harder landing in the US economy, not starting tomorrow or next month, but closer to the end of the year. So for the time being, the rally might continue, but we are on our toes in case the cyclical outlook shows some signs of deterioration.
This week we have the confirmation on the CPI data in Europe. We've already had one this morning in Italy. We're going to have one of the Eurozone, of the CPI in the Eurozone in June later this week. Do you think we will have any surprise in respect with the data that we had already?
By the way, it's not only the Eurozone, also UK inflation numbers will be out as well. I think what it will ultimately show is that it simply takes time for inflation to normalize once we have been at a very high level. We had a very benign reading the other day in the US. Now, month over month, there can, of course, be also positive surprises. But in general, we think it will take a while for inflation to really come back to the levels that central banks are targeting. And for that, we would not expect central banks, the Eurozone central bank, nor the Bank of England, to step back from their policy of fighting inflation. So if anything, we would expect, notably for those two central banks, that the markets will have to price in even more hikes or keeping rates higher for longer.
Retail sales in the US are out tomorrow. Stefan, what are we expecting for this?
For the time being, the consumption numbers remain strong, including retail sales numbers. The labor market has been holding up. Now, there have been some moderate deterioration in the labor market. The unemployment rate has gone up a little bit. But you know, we're also when looking at the ADP labor market data, which were out less than 2 weeks ago, we have seen that there is still some underlying strength in the labor market. So we are not too negative on the near-term data related to the consumer. But from a market perspective, if the data are too strong, of course, then the volatility in financial markets will be back on the agenda, because then markets might start to price in that probably they were a little bit too fast in pricing out a second rate hike later this year.
Mm-hmm. Next week, Stefan, we will have the Fed and the ECB meetings. Is it already priced in that the two of them are going to hike interest rates?
Yeah, this is basically a done deal from a market perspective, and rightly so. For the Fed, actually, what the market is telling us, one more, and then they are done, and rates will start to be cut starting early next year. That's where we may have a debate. We may also see the Fed even contemplating a second rate hike later in this year, but we are not convinced that we're going to see the first rate hikes already starting early next year. For the ECB, A lot is priced in, but also, as I just said, the risk is that we will see more going forward or rates higher for longer than what the market is currently pricing in.
Do you think next week's rate hike for the Federal Reserve is going to be the last one for the Fed?
It might be, but the market says it's the last one. We are less sure, but from a market perspective, from an investment perspective, probably what matters more are two factors. First, how fast will the Fed start to cut rates? And here, the most recent statements from central bankers, from the FOMC members, have been that probably it may take a while, or they're definitely aware that taking the feet off the pedal too early runs the risk of not bringing down inflation sustainably. So that might be one aspect that's one aspect that investors have to focus on. Will rates really go down already starting early next year? Here we are less sure. And the second aspect is, of course, what's going to happen to the economy. If rates were to go down rather quickly, then it would be for a reason, because of the slowdown in the economy. And that certainly would mean some headwinds for the earnings outlook.
Stefan Hofrichter, responsable de economía y estrategia global de Allianz Global Investors. Thank you so much, Stefan, for being in Negocios Televisión. It's been a pleasure to speak to you.
My pleasure. Thanks for having me. Thank you.